You see what it do. All right, everybody, we're back one more time. Wealthy Ways. We're gonna try to answer some of your questions, have a few conversations with everybody. Hopefully, please tune in and type your questions in the chat box. And so we have Sabine, a multi-purpose lawyer, Jalil Jones over at Fix Quick, and Arthur Roberts in your neighborhood financial advisor. So everybody, how you feeling today?
Say it again now.
So how you feeling? You got to turn your sound down. So how you feeling today?
Yeah. I'm well. Besides, the raccoon situation. I hope he's okay.
I'm saying that's one of the landlord life, man. Raccoons in the ceiling.
Yeah, I'm praying that it was a squirrel. I went over, I beat the ceiling, didn't hear any claw marks. So I assume if he wasn't asleep, he was gone. So
I had one. I had a raccoon in my rental property last year, and the tenants got it out themselves. So that worked out. Yeah.
Yeah. So the so the issue is, he was forced to move from his previous property in the middle of construction of this property. So I got the front room semi-demo with an open ceiling. And it's quite possible if it is in there and it needs to come out because the hole where it came in is sealed up, it may pop out on him tonight.
Wow.
It's quite possible if it is in there and it needs to come out because
so you got to turn. You got it.
You gotta mute your YouTube.
Yeah, who's that?
If it is in there, and it needs to come out because you got to turn. You got it. I don't know who that was.
Who that? Yeah, so but it'll be out. I hope if you're watching, it will be out before the first of the month.
Yeah, that is not comforting. I'd be like, I am not sleeping here. This thing better be out this house. Not doing it.
Yeah.
No, mine's like when I had mine, it was actually, I was a little nervous. I can't front like when the raccoon was in my ceiling. It's like you can hear it. They big too. Like you hear them scurrying around. Like it's not a small sound at all.
So it actually sounds like a woman with long nails just patting on the table with her nails.
Oh no.
Yeah.
Raccoon. So I bang on it. You hear them scurry out. So now here in Philadelphia, man, we got a serious raccoon and possum problem in the city. Like it's bad.
So let me ask you this. So with squirrels, I know squirrels have nails because they climb trees. So,
Well, it could be. Let me ask you this. Does it matter if it's a squirrel or a raccoon?
it'll be less frightening if it does pop out as a squirrel.
Listen, squirrels are vicious though, bro.
Yeah.
Do raccoons attack?
Yeah, raccoons.
Yeah, raccoons definitely attack.
I couldn't imagine that coming at me. That is crazy.
Yeah, they don't have the band around the eyes for nothing.
They ready?
Yeah.
Now they focus.
They are bandits. Yeah, I don't know. I'm kind of nervous for them. So I think I do my due diligence and try to get it out. I don't know if they call me tonight and say they're here. What am I supposed to do?
They're not gonna call you. They're not gonna call you. You think they're gonna call you?
Yeah, probably.
If it happens. Yeah. All right. Well, hopefully there's no raccoon action tonight. But
hopefully, because I asked them. I said, "Well, where was the last time you heard it?" And it was close to the hole, so maybe it rolled out.
I had one in my first floor ceiling. It was there for weeks. I was banging the ceiling, and it was just for weeks. And I just
So when you banged on the ceiling, did it move?
It moved, but eventually it stopped moving.
So because I went in, I banged on the ceiling, started from the front room all the way to the bedroom. I didn't
Right.
hear anything.
Right. So this honestly, this maybe not wasn't a record. I don't know what this was. I can never see it, but either way, but good luck. Good luck on your tenants. Hopefully it works out. As to some of the things we got to do with being landlords.
Yeah, but so to all the people out there watching, potential renters, it will be out tomorrow.
So, all right. So listen. So before we move along, I guess our topic today we're talking about beginning investing in the stock market. I think I would be remiss to at least not even mention um, Breonna Taylor and the circus that is Louisville right now. You know what's going on. I think that it was kind of expected, but it just it's a sad situation. And actually, I got one of my friends on social media defending the police officers, but I'm like, man, like it's one thing, right? That just kill somebody in a shootout, regardless of what the circumstances are, it's a sad situation. It doesn't really matter what side of the issue are on, but either way, things are changing. So, like I said, had to at least mention, Breonna Taylor. Feel bad about that. So let me ask you this real quick, Sabine. I know the law is different, right, in Kentucky versus New York State. Did they even have the no knock warrants in New York State?
That's I am.
I know you're not a criminal attorney. I get that. I know that. But I think at least ask. You're the closest thing to it.
Yeah, I don't believe so. But I could be wrong. I don't believe that they allow just a no knock warrant in New York. I just think it's crazy how it went down, because and it's like, I hate to say it, but I have like two views. Like, on the one hand, if they thought they were going into the right place and somebody was returning fire, I'm like, man, that's a tough situation. But at the same time, they messed up.
Right.
You know what I mean? They messed up. You killed somebody who was innocent, who was not doing anything, who just completely innocent. Like, they messed up. Somebody has to pay for that. And it shouldn't be that they just get to walk and it's like, oops, my bad. Like,
right. Like, no change. Like, when no changes. And like I said, and my thing is, we know as law enforcement, right? We know, and I don't know the circumstances, right? I don't know the whole story, because some people are saying it was the right address, but the ex-boyfriend, then it's not the right address. The person they're looking for is already arrested. Right. There's conflicting stories, right, about the circumstances, but behind it. But forget all of that. If you're going to kick a door in, there might be gunfire, right? If you kick somebody's door in without identifying who you are, so you could just go in, lights off, and that just makes everyone then even me, right? Wrong house or not, like, you have to defend yourself. So now, am I wrong for defending myself? Like, oh, they were cops. They should say something. And mind you, this is in Louisville. This is a small shotgun house, surrounded, knock on the door, we coming in. It was way more dangerous to do what they did. But
they also, I'm sorry, they also had an officer firing from behind a curtain on a balcony.
Wow.
So he was firing into the house he didn't see anyone.
And was just firing.
That's crazy. Like, why?
He was scared, man. I think, listen, being a police officer is a hard job. It's a scary job.
I get it, but if you're not in the place, you're not in the building. You don't know who's in there. It could be kids in there.
It could be friendly fire. It could have hit somebody else. Listen, he was either excited and waiting to bust his gun, or he was scared. It could be one of the two. Like, ooh, he was waiting for this moment right here. I get a chance to. I was waiting for this. I can't get it started. So, but nah, I don't understand the circumstances, man. But either way, like I said, being a police officer is a tough job. I understand the need for the police. I just wish that policing in general was different. You know, how things are done. You know, and there's no, without going too far, 2 minutes in, but without going too far into it, I know for a fact that if I was a police officer, that all that money and all them drugs would not make it back to the precinct. I'm just putting it out there for me.
That's terrible.
Malik, how much did you get?
Man, listen, whatever they like, no, they ain't had that much off it. No, they ain't had that much. Sorry, I don't know. I don't know what they had. I just know that all of a sudden my bulletproof vest is a little bit bigger that day. So, all right. So
$300,000 bus turns into $30. All right, he didn't have anything on him. It was a waste of my time.
Yeah, let him go. Nothing to find here. Nothing to find at all. No, so there's no way. But once again, knowing that and know myself, I don't put myself in that situation. You know, I will never consider being a police officer. But any rate, guys, anybody that's watching, you have any financial questions, please put it in the box. We'll do our best to answer any of your questions. Like I said, in the meantime, what I like to do is I like to point at myself a lot, because I know there's mistakes that I've made, right? And I know there's things that I've done that I like to share, because I know there are probably millions of people that have done the same thing and made those same mistakes. And so I think we can kind of get more engagement if I point at myself rather than point at everybody else, and point my mistakes out so we can correct them, right? So that being said, so for the people that have been watching my journey, let's say Coach Carter, and the people that come on my page, I just started learning about investing in stocks in March. Like in March, maybe in April, this is like around the time when COVID first dropped. Before that, I'm 100% real estate. I was never doing any investment outside of real estate. It was just buy rental properties, buy a house to flip, and that was pretty much it. But since they shut the city down, I was no longer able to be in houses. And the first 2 weeks of COVID, man, I just did nothing. And I did every day. I was just existing. I think I watched TV the entirety for 2 full weeks, and it wasn't. And then I was like, okay, let me get to work. And I started to reach out to people and learn about investing in the stock market, right? So I'm going to say what I did. So what I did, I paid a couple of people for consultations. I went and I bought a couple of classes, and so I took a regular stock investing class for long term, and I also took a couple of options trading classes. And so I started to do that heavy. Like I didn't even do the paper trade. I didn't do fake money. I just jumped right in with real money, because it's hard for me to learn without having.
What's the fake money route? What's that?
Paper money.
Like on TD Ameritrade, they have like a platform where you could trade with paper money.
Okay.
Yeah.
Right. Yeah. Exactly. It's just, and so you watch it, so it's not real. So you can see it going, but like me, I need to have for me to pay attention. I need to have hot dates. So,
question, Malik. Did you have what's your option trading strategy? Like, how did you go about trading your options?
All right. So at first, I was using instinct, a whole lot of guessing initially, right? And then, what's up, Coop? What's up, Coop? So, a lot of instinct, and I was doing well, man. I started with small change. I went up about 40%. I did when I came down to it, I was trading a lot of Southwest Airlines. I was trading Nvidia hard. I was trading Coke. I was trading Disney and Microsoft. And so at the point when I was doing my best, what I would do is when any of them came down 2%, I would buy a call for that day for right out of the money, because like, and knowing that they're going to come back up 1 or 2% the next day, and I was just doing that. So like every down day, buy a call right outside the money, and so so for those that don't know, when you buy in a call, basically a call is I'm thinking that the price is going to go back up to a certain point. So I basically put 100 share option contract is 100 shares of stock. So I put this 100 shares of stock on layaway with this. I might pay you if the stock price, let's say Microsoft at the time, like $190. I might pay you like $1 per share for that 100 shares of stock just to hold it for some time in the future. It could be next Friday, 2 Fridays from now, a month from now, whatever it is. So I give you that 100. If I pay you $1 per share for 100 shares, I'll give you $100 just to hold your 100 shares of Microsoft. And as the stock price goes up, what I paid you, that premium, that money that I gave you, the $100 begins to increase. And so what I would do is my goal was to just make 5% every day. So if I put $1,000 up, I'll be, happy to make, like $50. And I'll be cool with basically just doing that every day. And then, but all of them didn't go down every day. All of them didn't go down 2% every day. And so what I would do.
Did you lose in the beginning while you were doing that, or
at the beginning I was winning every day because the market was on the way back up? So I was rarely losing a trade when I was doing that at the very beginning. I didn't start to lose until the market started to level off, and then I started to lose some trades, and then and I wasn't doing any research at all. Like I lost, I think I lost me on Hertz. I think the week that I did I did a cover call on Hertz. And the week that I did it on like that Tuesday, and them bastards, they filed bankruptcy on Friday.
Ooh.
And so I think I lost $600 on Hertz at that time period. And I got out. I probably should have stayed in and kind of got some of my money back, but I lost $600 on that one. But then, my goal, okay, if I can make $100 a day, and so Nvidia was the most expensive one because Nvidia share price at the time was like $350. So I might have to put up $1,700 for that contract. And then that one, I might make 10%, 5%, but I was doing it every day. And so that strategy was working until it wasn't, because and then the stock price just kept going up. They weren't coming back down. And I wasn't doing the studying that I needed to do and doing the options. And right now, here's the thing: options are all over the place. Everywhere you look, you see options class, options this. Nobody should be trading options right now. Nobody. Like, most of the people that are doing options have no idea what they're doing, and everybody only posts the wins. There's even the best options trader only wins 60% of the trades, but you only see 100% of the trade posted. You only
why do you say no one should be trading options right now?
It's very risky.
What I'm saying is people that are doing it, because the reason why I stopped doing short term, I still do options, but I do long term options. My option contracts expire. I have 5 positions. Well, I have 5 different. I'm only trading ETFs right now, and the ones that I have go all the way out till January of 2023. So I got 2.25 years to be right.
Okay.
So I'm not. Go ahead.
So when an option expires, is there something that someone's supposed to do, or it just expires?
It expires worthless.
It expires worthless.
The option.
Yeah, that's if the contract is not in the money yet, it expires worthless.
But
money, you have to close out the contract, basically.
Say it again. When it's in the money, it expires in the money. But when it's out the money, then
Yeah, so when it's out of the money, it expires worthless. You lose
Okay.
your premium, the money you invested to buy that contract, it's worthless. But if it's in the money, like let's say you buy a call, now you have to close out that contract. You have to sell to close. So it's
Okay.
like a step so that you close out the contract to basically make the profit.
Okay, so at the end of the contract, on the expiration date, you have to sell it. You can't
Before it
just let
expires,
before it
sell it.
expires.
yeah,
So
because
when the contract expires and it's in the money, where does that leave the person who bought the
so
contract?
there's a couple ways you can look at it because remember, you're buying one contract is 100 shares, right?
Right.
If you were to exercise that contract, that means now you have to buy those shares outright. That 100 shares,
Right.
that one contract. But if you
Right.
just want to sell the contract, you could sell the contract and just make the profit.
Oh, so it's like
Okay.
you flipping it, basically.
Yeah,
Exactly.
basically.
Okay. So if
Exactly.
you buy it, you gotta buy the 100 shares at market rate.
Yeah, so basically, when you buy an options contract, one contract is equivalent to 100 shares of that individual stock. So basically, it's like let's say Facebook, for example, you want to buy a contract for Facebook. So basically, you're purchasing a contract to purchase 100 shares of Facebook at a certain rate on a certain predetermined date, and you're hoping that that stock price is going to go either up or down. If the stock price goes up, that means you're in the money. That means you're able to buy that stock at whatever agreed price that you set in that contract. So let's say the stock price is at 200. You buy the contract you buy a contract that you could buy at $200, but then the stock price is at 250. You in the money. You got $50 profit on each share.
Got it.
So you have the option to exercise and purchase that 100 shares, or you could just sell the contract and get the profit.
Make that
Okay.
50.
Yeah.
So an easy way for those to kind of digest that is Malik has a house for sale. He tells me I can purchase it for 60 grand. When it's done, it'll be worth 160 grand in 6 months. But I have the option to buy it at 60,000, and when it's done, it's worth 160. I can sell it for the 160, and then I make the profit.
Right. Or you can settle on it for the 60 and still own it.
Right.
Right.
Oh, you
right.
can.
Yeah. But the tricky thing with the options is you got to consider the expiration date of these contracts. So you got to consider the time value of money. Every day that goes by closer to that expiration date, the value of that contract goes down.
Goes down. Right.
So like let's say today is Wednesday, right? And let's say you got a contract expiring on Friday. Every day that goes by closer to Friday, the value of that contract is going down. Because remember, your expiration date is right on Friday. It's not much price movement. The stock price is going to go. It'll more than likely expire worthless.
And so what Arthur explaining right now is that's called one of the Greeks, right? That's called theta. And if you can't tell me what the Greeks are, you should not be trading options.
Be trading. Yeah, I'm not. I really don't understand the Greeks myself, but I mean, that's why YouTube is there.
Yeah, listen, YouTube is amazing. YouTube gives you a lot of information, but also a lot of misinformation. You got to make sure where you're getting it from is the right sources.
Right.
But so don't get me wrong. Like, listen, there's real money in trading options. Like I said, I made a good amount of money doing it. I still do long options, but what I'm doing right now is this was crazy, man. I think that if people knew how easy it really was to make money out here, like the labor prices would be going through the roof right now. Because I'm gonna just give you a real example, right? A real example. It's another options play called the covered call, which is what I like to do. It's a little safer route. There's some risk, but it's very minimal risk if you're doing it with companies you already own or companies that you want to keep. And so for this example, I'm only going to use Apple. because Apple isn't going anywhere. Apple isn't filing bankruptcy anytime soon, right? Let's just use Apple. Plus, their stock is at a good price where the numbers are small enough where it's easy. So this is the real deal that I have. I have a house that I'm in. I'm all in here in Philly for $65,000, right? That's the purchase and acquisition cost. I have a tenant in that house, and she's paying me $1,200 a month. I have no mortgage on that house, free and clear, whatever, right? So that's pretty decent money. And so I'm around 18, 19%, depending on how you calculate the return on investment. So now at 18, 19% is a good amount of money. But now let's just think about Apple. Apple, let's use a price of $110 a share. It's a little lower than that, but let's use $110 a share. To buy 400 shares of Apple would be about $44,000, right? So I could buy 400 shares of Apple for $44,000 and still have $20,000 change. Now there's a thing called a covered call, and so normally people are buying options, they're paying a premium. So when people think about an option or contract, there's somebody on each side. When people are buying contracts to calls or buying puts, then they're buying it from people that actually own 100 shares of that stock. So me, for example, let's just say I was to buy 400 shares of Apple. I'll take every 100 share. Somebody, as of today, as yesterday's rate, they would pay me about $1 per share to hold on my stock until this Friday, right? So I got 100 shares of Apple. This person, they give me $100 to hold on to my shares by Friday. If the stock price starts going up, then they sell their premium. Somebody else buys it, and if the value of that stock is still above that, like $111, then that person would settle and they would buy those 100 shares in my stock. But Apple price right now is sliding back down from that 110. So what happens is that person's dollar they paid me expires worthless. So when I sell that contract, I get that $100 right now today. I can't touch it until Monday morning because the contract expires on Friday at 4 o'clock. But when I sell that contract, it's $100 that I get right now. And so what'll happen is Monday, I'll either have a bag of money from selling those 100 shares, or I'll have all my stock plus another $100. So the reason why I chose a strike price, a price where to sell it at, is because it's not likely to hit the point that I picked. And so that's why it's $100. If I pick something a little closer, the premium will be higher. But I don't want to get too deep into it for this time being. But either way, I'm picking to the point. So this person pays me $100. So now I can do that. I get $100 on average because the premium price changes every week. And every minute it changes based off of the price of the stock. But let's just say for easy math, it's $100. So basically, I can make $100 a week off my 100 shares of Apple. If I was to buy 400 shares of Apple for $44,000, now I can make $400 a week. $400 a week times 4 is $1,600. So I'm making
like you're renting out your
$400.
shares.
Huh?
It's like you're renting out your shares. Is that what you're saying?
Yeah, pretty much. You're not your shares out. Exactly. That's exactly what it is. You can hold my shares till Friday, and what'll happen if the price goes up, then they'll close on them. If the price goes down, then it expires worthless. Right. So now I got 400 shares of Apple. I'm making $400 every week. So in a month, I'm making 1,600 versus my 1,200. I already only cost me 44,000 versus 65,000. And it's like a few, like 4 or 5 months a year where we got 5 Fridays in a month. So those 5 Fridays in a month, now I'm getting an extra payday. So now I'm making 2,000 that month versus the 16 for those 4 or 5 months, and it's 5 Fridays. right? And so there's no service orders, ain't no is the tenant going to pay, is no property taxes. What I don't get from doing that is I don't get the depreciation from the tax. I don't get the other write-offs. I don't get,
I was gonna say, so you think this is something that could replace real estate for you, or that would?
So it's not going to. Let me share this. My guy by the hood, he just covered calls are the cheat code. Running the wheel, what makes it even better. So he wants me to go by saying running the wheel makes it even better. Now I gotta go even deeper because he just shared the whole wheel concept with me like yesterday. So I explained the wheel. The wheel is important. So will it replace real estate? No, it won't replace real estate, but it'll definitely supplement real estate. And I thought about I actually legit thought about selling one of my houses, right? And so I got a house that I probably only owe like 30,000 on 40,000 that I can probably sell it for 170, right? And so let's just say 150, doesn't matter. Like everything, I walk away with 100 grand, doesn't matter, right? Or 150, 105,000, whatever. Doesn't like this. Once again, there's a math stake in this conversation.
Yeah.
If I sold it for 100,000, I could get 1,000 shares of Apple stock. That 1,000 shares of Apple stock now you're getting paid $1,000 a week.
Wow.
From just having money available, and I only work on Mondays from 9:30 when the market opens to 9:05. Enough time for me to sell my contracts. That's it. That's it. I work Mondays from 9:30 to 9:35. And I make $1,000 a week just for having 100 grand available. Arthur, am I right or no?
You're on mute.
Yeah.
No, yeah, you're right, Malik. Absolutely.
Thumbs up, right? Right. So now what makes it so now what I am doing is I am doing that, but on a smaller scale. But the way that I'm doing it is I'm setting up my retirement account. So now if you're doing it in a brokerage account, you pay the highest tax gains rate. So that's just like 35%. But let's just say I wanted to do it in a brokerage. Then now I'm bringing home $700 a week. And I'm only working on Mondays from 9:30 to 9:35, and I can make $700 a week, right? And what's that? That's like $35,000 a year off my 100,000. It's making 30% a year already, and plus Apple pays a small dividend, and I can add that small dividend back. But the strategy that I'm doing is I'm doing my retirement account. I don't have to pay those capital gains tax on those transactions. If I do it in a Roth, then it's post-tax. I already paid money on it. I already paid taxes on that money. And the other account I haven't set up yet. I'm thinking about doing it in a SEP. Or Arthur, you let me know what I should do where I put the other money in. And then I got to pay taxes when I take it out at 59.5. I think you take it out. That right, Arthur? 59.5?
Right.
Right. 59.5. So I'm not paying any.
I want to know what's the best one for like if you're self-employed. I mean, I heard the SEP, and I think Lindsay might have touched on this, that the SEP is the best, but is that the best route?
I would say, yeah, if you want to invest in the stock market and you're self-employed and you want to do it, avoid the tax, you want to do a pre-tax, then yeah, SEP would be good.
Okay.
Right. Now, let's think of, 100,000 is a lot. 30, is a lot. But because
with the option, like you could lose all of that, right?
No. So what happens when you're doing a covered call is that's why you only pay great companies, because here's the risk. The risk on the upside is the stock price goes up and someone calls your shares away, but you still get the difference. Like if I buy it for 110 and then I sell a contract for 115, whenever it sells, I still get that $5 gap. So if it goes to 116, I don't get that dollar over at 115, but I still get the premium, the $100, and then I still get the $5 per share for the 100 shares. So there's the loss is it's not a loss, it's an unrealized gain. Right. And then if you enter a contract and the stock price rolls back some, then you're stuck in that contract until Monday morning. But if Apple rolls back, you're not worried about Apple going bankrupt anytime soon, right? Like
So
Apple,
is this every Monday?
every Monday,
Every Monday.
every Monday,
So why not Wednesday?
because the value of the contract is more on Monday because you get more time.
Right.
Okay.
More
Remember,
time.
closer to the expiration date, the less the contract is worth.
Right. And so you can do it over for 2 weeks or a month. I don't like to do biweekly. I don't like to do monthly because I don't like to have my stock tied up that long. They do pay more to do it longer, but I don't want my stock tied up.
But Malik, what you think about the weekly contracts? They're usually less expensive. It's more risky, but it's like because the longer term contracts are generally more expensive because it's a long expiration, right? So like when I do my options trading, I usually do weekly calls because I know it's going to be a lot of market fluctuation. And I usually buy options close like when they do earnings calls. Are you familiar with earnings calls? No.
Malik,
No.
are you frozen?
Maybe he's frozen.
Yeah. So basically, public companies every quarter they announce their quarterly earnings, their performance for the prior quarter. And usually from there, that drives the stock price. So closer to an earnings call, let's say if Apple was reporting their quarterly earnings for the last quarter, you already know that there's going to be a lot of stock market fluctuation in the stock price. So that's why I usually get 1 week calls for options that are reporting on a certain earnings day because I know that the stock price is going to go up or down.
Got
So
it.
that's how I'm able to.
So I got a question.
Go ahead.
All right. So Malik, he did his till what do you say, 2023?
Yeah, he probably bought like
so does that mean every Monday, if the stock is doing well, he'll get a check?
No,
Or
not necessarily.
He'll cash out every Monday.
What that contract means is it's he probably bought like a 2-year contract. The contract doesn't expire for another 2 years.
Right.
So there's times of contract.
My bad.
Think about 6 months, a 1-year contract. It all depends.
Okay.
So longer. Go
ahead. Finish. I think you were about to answer my question.
I was just going to say the longer term contracts are generally more expensive because it has a long duration as opposed to a weekly contract that's going to be less expensive because it expires in a shorter term.
All right. So is that the only benefit? Is that the only benefit to buying a short term versus a long term because it's cheaper?
Basically, so yeah, basically a weekly contract is cheaper. So go ahead. Hello?
I hear you.
Oh yeah.
I'm here.
But
I'm
yeah,
here.
really, yes. Yeah, so generally, a weekly contract is going to be less expensive than a 1 year, a longer term contract.
Okay. So with that 2-year contract, you have to wait 2 years to start getting paid on it? Or if someone jumps in and says, hey, let me buy this from you now, can you cash out before the 2 years is up?
That's up to him. Like if the stock is in the money, yeah, he could sell the contract and make a profit. That's basically, on the owner of the contract.
Okay. Got you.
Can't hear you, Malik. Can't hear you.
I was saying. All right.
You probably have to mute one of your. If you're playing on 2 devices, you gotta mute one. We can't hear you still.
Check 1, 2. You're on mute. No.
I bought this signal enhancer from Google. I guess it didn't. It's not working. But but it's a little expensive too. I got to make sure it works. But so now I was saying, Jimmy,
you can't try it live.
Well, it's the only way. So he's selling the cup weekly, so yes, he getting paid weekly. But 100%. But the thing is, man, that weekly is just dangerous, man. Like, thing is, you really have to study the market and know what you're doing. And most people, the problem I have with people selling the courses more than anything else, people actually doing it, is they're doing it out of a sense of desperation, and they're not doing it. They're like, okay, I got to figure a way out of my situation. I need more money. And so they're doing it, and they're not doing it as like extra money. They're using their real bread, they personal income. And I don't like that, and it's like anything else. You have like a bankroll once again. And here's the thing: on average, over a 5-year period, 98% of traders, not new traders, 98% of traders lose over the 5 years on average. And so the reason why I stopped is like, okay, I don't want to be in at 98%. There are 2% that won over 5 years, but am I better than the algorithms? Am I better than the people that's getting paid millions of dollars to do it for the brokerages?
Yeah.
And no, I'm not.
That's what I was gonna say. A lot of times with options, like I was telling my friend earlier, I'm like, options trading is very risky. It's tough to try and beat the market. I'm like, we can't beat the market. We can't time the market. Hello, did I lose everyone?
No, you didn't.
I still
Oh yeah, I was saying you can't really beat the market, and I tell a lot of people that you got to really understand what you're doing when you're buying options, because you could lose your entire premium in an hour, and that's it. So I just tell people to really be mindful and understand how to trade options before you do it.
Yeah,
what about stocks? Have you traded individual stocks, or you just?
Oh yeah, that's what I was gonna say. So I tell clients, what is your goal? What is your purpose of buying options, for example? Are you trying to grow your money long term, or are you just trying to make a quick flip? And a lot of times they say, oh, I want my money to grow long term. So I say the traditional way to do it is buy individual stocks. Over time, the stock market is going to go up. Dating back to the Great Depression, the stock market has always gone up. So yeah, I'm big on individual stocks, just buying and holding, basically. That's
right.
What I would recommend for long-term investment.
So what I always ask people is, in what year?
Does anyone have anything on futures?
I don't know that stuff.
On futures? Nah. I mean, I got a bonds course, but not futures. But like once you understand charts, you can really trade anything.
Right.
I think like once I get it together, I think I'll probably have a bankroll, a small amount of money, and trade bonds. But what I ask people is, when has the stock market ever collapsed and not came back? Like, what year? What year has the stock market collapsed and not came back?
Oh, it hasn't. Like I said, data great.
It's never happened.
Yes.
So that's why you shouldn't be afraid of a market. Listen, if the stock market collapsed, we got way bigger problems than your little bit of money. I mean, everybody trash.
They're not gonna let that happen. They're not gonna let the stock market collapse.
That's everything.
Yeah, like,
listen, is done. The whole country is done.
Listen, at that point, that's me and Jalil with the squirrel trap eating these raccoons and squirrels. Like, that's what it's gonna come down to. Like, if the stock market crash, then your money in the bank ain't worth a damn anyway. So yeah, don't worry about the stock market crash, and just understand what you're buying. Right, study what you're buying.
And raccoons for dinner.
Yeah, listen. With some Texas Pete, some Texas Pete, some baby Rays on the grill.
You're taking it too far now.
Listen, baby Rays. Listen, just tell me one thing that's not good was Sweet Baby Rays.
No, we're not going there.
Yeah, come on. But listen, so I do want to say this one thing, right? This is important. I think this is important with the cover calls. Now, let's not even start out with a huge amount of money, right? Let's start out with something that's a little lower, a little easier to attain, right? Let's just say a $20,000 initial investment, and we're doing it in a retirement account. And now you're getting $200 on average a week from doing covered calls on. I'm still use Apple just because of the math, keep it the same. So you're still getting about $200 a week. So my strategy, what I'm doing is I am reinvesting every Monday that cover call money, the $200. For example, I'll reinvest that and buying another stock every week. And so what I'll do is I'll pick a stock and I'll load up on that so I get 100 shares of that, and then do cover calls on that one. If it's Apple, it might take me a year's time, and I'll have another 100 shares of Apple. And so that means next year I can make $300 a week. Then every week I'm buying $300 of another stock. And let's just say it's Apple. It will only take me 33 weeks or 35 weeks, depending on the price of the Apple, to get another 100 shares, right? And then that
So
next
you
year,
free money basically to continue to buy individual stocks.
right? Exactly. Let me see. Exactly. And then what happens is I'm 42. I could take that money out at 59 and a half. I can use that one-time initial investment of 20,000 in my retirement account, and I can run that. I can run it up to millions. And that's no exaggeration. If you're doing $200 a week and gradually $300, $400, $500, $600, $700, $1,000 a week, by the time 5 years come, you really might have about $1,000 a week, right? So now I'm 47 and I'm putting $1,000 a week, and I can run that up until I'm 59 and a half. I got 12 more years, but as long as the companies don't collapse, right? And I can always trade them. If I don't want the companies anymore, I could buy, sell, trade. I can still do it all. I can move the money around. But the point is now, you're putting in, $50,000 a year into the stock market, and then you're still getting appreciation. You're still getting it. You still own a stock, so you're still getting the dividends. You're reinvesting those dividends too. And this is not even with me putting in the $6,000 max with the Roth IRA, or I think it's the $26,000 max into the SEP. This is not even doing that. This is just that initial $20,000 investment. You could really run that up to millions just being diligent, doing this, and reinvesting every dime every week. You could turn 20 grand.
So what's the first step? Like, how do you get involved?
I would say the first step is to learn the fundamentals of stocks, right? And figure out what your strategy is going to be and what your one company that you want to focus on. I would say figure that part out. The guy, the guy Jimmy About It Hood who's posting, I am an affiliate for theirs. It's a very low cost, and I'm sure Arthur can also teach you how to understand the fundamentals of a company. Mm-hmm. And then after that, talk to Arthur. Arthur can set you up with your retirement account, and you can put money in there, and he'll show you after that the mechanics.
Yeah. So TD Ameritrade. So usually I onboard all my clients with TD Ameritrade. I use that as my custodian. And they have a lot of cool tools where they teach you, the fundamentals about stocks and stuff. So yeah.
So that's good. Yeah.
So who do you prefer? Ameritrade or E-Trade?
I would say, me personally, I prefer TD Ameritrade. For one, it's backed by a bank, TD Bank. E-Trade, okay. Those are more online, and from my understanding, I don't even think you talk to a human. Like if you wanted to call customer service or something, or you want to place a trade over the phone, I don't even think you can call them. Well, like TD, you could call and speak to a representative. You could have them place a trade over the phone. Where I put my money, be able to talk to a human. Like,
I'll tell you this, man. TD
I
Ameritrade has
understand that.
excellent customer service. They have excellent customer service. TD Ameritrade.
yeah, like I knew a lot of clients. They have what is it, Robinhood and those other online brokers.
Cash App. Yeah.
Yeah, no, that's a payment process, but like different online brokers like Robinhood. I don't really recommend Robinhood because it's an online brokerage account, and you don't know where your money is, in my opinion.
Yeah, I mean, so I have Robinhood. I also have a company called Doe. Doe is another online
Yeah.
brokerage, but that one's black owned, and that they do have free trades like Robinhood. So if I do something short term, or something like a little quick, I'll do it in Doe. That's just to, 'cause I don't want my short term play money to mess around with my real money. And so I do have my retirement account is with TD Ameritrade. I have a little bit of money in E-Trade, but I like E-Trade. E-Trade they give you more information. Like, so once you really get into it, like E-Trade, they're gonna give you way more information than TD Ameritrade would as far as on their brokerage website.
Right. I just
What kind of information? What do you mean when you say information?
I mean, so when I'm looking for the insider activity, when I'm looking for just the holdings, I mean, they're like when I want to look to see what the analysts are doing, I'm not looking for that.
So let me ask you: have you downloaded the Thinkorswim platform by TD Ameritrade?
I think it's them, yes.
And you don't find they have like the research reports and all that and all the charts.
They have some classes, but like I said, they don't have the insider. They don't have any of the insider activity. They do have it. I haven't found the insider activity on TD Ameritrade. And so the insider activity, what that is that'll the insider activity is who owns the company. It'll tell you what the officers of the company, what they're doing. It'll tell you who's buying, who's selling, who's holding, when they get it, right? So when you look at a company to evaluate it and you're doing your research on it, you want to know like what the ownership doing. Is the ownership selling the stock or they keeping the stock? What are the team? And if the ownership and the officers, if they're buying the stock, then that's a sign of what to come. But if everybody bailing out, then I'm going to see that. Real quick, by the hood says E-Trade has customer service. They were purchased by Morgan Stanley, so that's like Morgan Stanley. It's like Bank of America, right? Morgan Stanley owns Bank of America too.
I used to work for Morgan Stanley. Yeah.
Okay, well,
That must be new.
Yeah, I was gonna say I don't even that must have just happened recently because I don't think I heard that.
Yeah, I hear it either, but so that's the lick right now, and so that's the insider activity, and then also on E-Trade, it'll tell you what percentage of institutions own it versus retail investors and hedge fund. It'll tell you who has the biggest holding. So either it's user error, and I couldn't find a lot on TD Ameritrade, or it's or they just don't have it. And E-Trade makes it a little easier to find. And he said in February this year it happened.
Oh, okay.
E-Trade. So, but so like I said, so it's more information, and I'm just really learning. And I'm not. Don't get me wrong. Like I'm not a master when it comes down to fundamentals. What and a lot of what I actually learned from those guys over at By the Hood. I did go to YouTube University. I paid for a couple of different courses when it comes to analyzing a company. But there's the technicals and the fundamentals. The fundamentals are who's the CEO, what the balance sheet look like, what are the earnings. Like those things are the fundamentals. The technicals is just a chart. Looking at that chart, understanding that chart. And there are people that only use fundamentals. There are people that only use technicals. But if I'm looking at a company to buy and hold for a long time, like my retirement, I need to really understand the fundamentals. How much debt do they have? What's the in business right now? And this they call it a moat, right? And like, what's their competitive advantage? In business class, how I learned it was the SWOT, right? The strength, weaknesses, opportunities, and the threats, right? That's how I learned it in business. And so, but same thing as a moat. So understanding these things, that's when I'm like, okay, if I'm about to drop 20, 30, $40,000, $1 million, whatever it might be in this company, you know, what's it going to be? Yeah. Jalil?
All right, listen, I got to cut out.
Okay.
Yeah, can you hear me?
Yeah, I hear you.
Can you hear me?
Yep. All right, cool. All right. So, but yeah, so like I said, it's just, you know, it's those things. But so step one, like I said, you know, get the basics. You can definitely do YouTube University. You can do, you know, say Arthur, he's a you know,
I could hook you up with that. You know, I could
there you go.
a thing or two about stocks.
There you go. I mean, you might do a whole course, man. You know, start basics. We get together, but not. And like I said, it's important to me, man, just to learn the fundamentals. And then, like I said, especially this strategy here with the covered calls, that just opened my eyes all the way up. You know, when I left my job at the housing authority, I was making like 55 grand a year. This is like 5 years ago now, I guess it was. And I was like, so I was bringing home $700 a week. And then now, just from having access to 100 grand, I can make the same thing in minutes on Monday that I was working 40 hours plus a week for in public housing, you know, having to, having to step over bodies, having, suicides, having to go in bed bug houses, having to pick up old people, have to collect rent from people that just don't got it. Like all that stuff that I was doing, working till 8 at night, and I'm doing all of these things and to make $700 a week to bring home. But now I can make $1,000 a week and pay my taxes for whatever, and I can make the same thing pretty much that I was doing, actually working for a living, and just from having access to the money. And so once you understand that, once you understand these things, like one thing it did for me is I was already a saver, but it made me even more of a saver. So I really want to invest more now. Like I don't want to spend.
I think that's what it did for me too. Like I said, I started off not really knowing what I was doing, but as I'm starting to learn now that the information is really out there, now it's making me want to save a lot more so that I have more money to invest.
Yeah, I mean, we talking about, and so right now people can look at, everybody want to get rich quick, right? And like nobody want to get rich low. I'm like, I can still live my life. I can still do what I do. I still got rental properties. I can still flip houses. I can still do whatever. But in the meantime, I'm stacking this bread so that when I retire, retirement is gonna be crazy. Retirement is gonna be nuts. When that time comes.
Yeah.
But anyway, so go ahead. So Arthur, so you can tell people, what do you think the first step should be? Go ahead.
The first thing I would recommend is literally understand the stock market, understand the fundamentals, understand how to analyze a company. Like for example, their balance sheet. What assets do they have? What's their debt like? What are their profit margins? Things of that nature. That's how you go about understanding, how a company operates, basically. And there's a lot of training platforms. Like I said, TD Ameritrade, they have like stock market introduction courses and stuff online. And there's another course, it's called Coursera. I can send it to you guys. And there's a lot of training courses on there as well. And I think there's one on stocks as well, like introduction to stocks or something.
Nah, you definitely should. Plus, if you think about it, I think it's like 1967 or whatever. If you just buy the S&P index, the returns on it like 7% a year anyway. So you just buy the index. But
so me personally, I'm gonna be honest, I don't really buy ETFs because I'm old school. I want to own the individual company as opposed to owning an ETF that's basically like a pool of different stocks. I want to be able to share in the dividends when they report for that individual stock. And as far as, getting into the stock market, I would say try and build a core portfolio of companies that are gonna go up. Like staple, like value companies, like you know, Microsoft, Apple is not going anywhere. So over time that stock is gonna go up. So you want to build a core stock portfolio that is gonna go up over time.
Yeah. So I'm gonna do what I do is I do a mixture of individual stocks, but also um, um, an index fund, an ETF that follows the S&P, and then also an ETF, and then after that it'll be individual stocks. I do have those two. Those are my less riskier. Like I said, the S&P just follows the market, and then ETF is a bag of stocks, and so it's not going to fluctuate, up and down as much. But then after those two, I do have my individual stocks that I'm building on, and that's my personal strategy. That's it. So we hit the hour mark, just over. It was fun. I think it was always a good conversation talking about money and learning, from people. We'll think of something, and if the people want us, we can do it again next Wednesday. And I said I had a good time.
Yes, sir. Thanks for having me, Malik. Appreciate it.
Yeah.
All right, I appreciate you.
All right, guys.
Later. Bye.